What's going on, guys? Brian's here. Welcome to my YouTube channel. I want to go over a couple trades that I took on September 5th and September 6th, so the Thursday and the Friday. Both trades did not work out. I've gotten the request to show trades that don't work out. In my opinion, I try to share trades that are agnostic of my decisions, and I try to present the data or the way I interpret them as unbiased as possible. And in my opinion, when trades don't work out, it's actually more so about risk management than it is about the actual trade. Risk management, in my opinion, should mean if a trade doesn't work out, you're not really losing that much. This was an entry long here that I took on the Thursday, and this was my closing trade on the Friday. I was long targeting, thinking the market was going to bounce back up to here, so I took a stop loss the next day. On Friday, I entered another trade long here as we were at the absolute gamma strike, and then I closed it at the end of the day as it didn't work out. Both trades were losing positions. I was just following the same system in which I normally would trade, but things didn't work out and I didn't really lose that much money. I'm hoping this video will bring some value to traders out there, but I tried to share what I think is going to provide value to the next trader. And at this point, I probably have a list of hundreds of topics and videos that I would like to create, but there's only but so much time in the day, and I have to prioritize which is more important than the next. This would be the snapshot of the tickets here from Thinkorswim, my main margin account. And we can see right here on the 5th at about 2:30 Eastern time is this tick right here. I went ahead and just marked off my entry, and then this would be my exits the next morning after. About 17 minutes after the market opens. What I traded was a bull call spread. So I bought the 5600 call for the ES, and I shorted the 5625 call, which created a vertical spread known as a call debit spread. There's so many different ways for these things. The point here is that I was long at this time right here, and I was targeting the ES bouncing up to about here. So this is the SPX chart that we have up, but I use the SPY, the SPX, the ES, the XXP. I use them all interchangeably. It doesn't really matter to me. I do most of my analysis on the SPY. This was the SPY at the same time the SPX was at this level, which I believe is right around here on the ES, and I was targeting 5600. So 5600 was pretty much about the equivalent of if the SPX retraced back up to this level, which is pretty much the equivalent of if the SPY went back up to this level. So again, it doesn't really matter. The SPY is my main one for analysis, then will come the SPX, and then I like to use the volume profile on the ES. What you guys are seeing is that I closed this order here the following day as the trade did not work out. We will get into the reasons why, but I just wanted you guys to see the entry and the exits. And then on Friday, this would be another trade right here. Instead of buying some calls, I decided to sell some puts. So this is a put credit spread, also known as a bull put spread. It's just another vertical in which I'm expecting consolidation around this price, or I'm expecting a bounce back up. And then we can see I closed this trade about 3 minutes before the market closed right here, as the markets did not bounce. So now that you guys have seen the entries and exits, I want to dive a little bit more into the reasoning behind why I took those trades. In the Quant Trading App Discord, some other traders had a couple questions. I was saying that I think we're still good, meaning I think the market is still good, still expecting a little bit of a bounce. I'm long and willing to take the risk. So this is at 2:37. So this is just actually a few minutes right after I actually entered my trade. So he probably asked around here. I was already in my long position, so it was funny that a few of them had asked, as I'm assuming they were contemplating if they wanted to be long also. I'm saying I'm long, I'm willing to take the risk. That shouldn't have really very little effect on if you're thinking to be long or not. This is just me following my rules. The market has broken below the 2 sigma level, and now we have reclaimed that 2 sigma support level. The SPY was also back above VWAP. If we're back above VWAP and there's confluence with VWAP lining up with 2 sigma, that means to me we have reclaimed support. So this is us reclaiming support. This is it retracing. On that retracement, I'm going to look to be long here, and I'm going to expect a bounce back up here. If I am wrong, it means my risk is very small. In this case, I was risking below the low of day, so I gave the trade a little bit more room, which is why I went with the following Wednesday expirations. This was not a 0 DTE trade. I decided to use ES options as I was expecting to swing the trade, and I didn't know if the market was going to rally after hours. So I wanted the opportunity to actually close the trade in the overnight session instead of waiting for the next day, because I was thinking the market might have went up to here and then maybe reject It could have happened pre-market the following day, and before you know it, the market's back down here. And then I would tell myself, that sucks. I wish I could have closed the trade in the after-hours session. That's why I chose to use the ES options. Sometimes I might use SPX options. Sometimes I might use SPY options. Sometimes I might buy calls. Sometimes I might sell puts. Sometimes I might run a butterfly spread. Sometimes I might run some sort of ratio spread. It's different for me in terms of how I'm going to execute the trade. All I know is this is telling me it matches my criteria to be long. Execute however I'd like. I'm obviously going to pay attention to risk management, as there's a lot of uncertainty and there wasn't enough conviction to just buy calls flat outright. It wasn't enough for me to buy futures contracts. Things were still very uncertain. There was a lot of supply overhead. I think the point of control for the ES was right around here also. So there was a little bit of consolidation that happened all during the overnight session. So I'm well aware of the potential resistance here. So I'm not going to put that much risk on the trade being long. I also wanted to give it a couple days or so to see how things would have played out. Now, why would I close the trade out here on Friday, which we can consider might be a little bit early? If my stop loss is below here, the low of day from Thursday, why would I close the trade out around here? That would come from my analysis earlier in the week. So this is the VIX, and this is our retracement to 2 sigma. So let me zoom out here. Earlier on in the week, right around here, I mentioned to the QTA members in the Discord that if the VIX retraces back to 2 sigma, be wary that if it bounces, the markets will very likely go down. Let's see if I can find that for you guys here as I'm recording this video. Here we go. So when is this? This is on the 4th. So this is 10 a.m. Eastern time. So not even an hour after the market opens on the 4th. We need to be wary of if the VIX retraces back to 2 sigma, as it can bounce, and that could cause SPY to go back down. So this is well before the VIX gets down to this level. That means I'm setting an alert. It means I'm keeping it on watch. And if that happens, I no longer want to be long. So it happens 2 days later. This is the Friday. The VIX comes down to the 2 sigma level. I am long. I see the VIX bounce. I take that as my warning. Close out of your long trades. This trade has not worked out. I take a small loss. I keep it moving. I go about my day. And then I'm just watching, because at this point, it was never my plan to short the market. I generally don't look to short below this 2 sigma level anyway, as this might only happen twice. Unless we're in a bear market, then we might see maybe 3 to 4 times a year. But more than 75% of the time, the market is going to look to close at or above this level. I am not interested in taking a trade that is against the statistics there. So this does not fit my playbook. Therefore, I won't participate. I'm going to sit back and look to be long the next time the market hits a key level. This key level right here is the absolute gamma strike on the SPX. On the 0 DTE time frame, which was the Friday expiration, there was a ton of absolute gamma here, and there was also a lot of negative gamma at this strike. So my expectation at this point is, hey, I'm going to sell some puts, because even if the market just consolidates and is choppy around this level, I'm going to profit off of the trade. I don't really need it to bounce up aggressively, as long as it stops selling or doesn't sell off as fast. So we can see it did continue to sell. We did bounce. My trade was green for a little bit, but then it turned red as we came back down here. But then at this point, the market just consolidated, so there wasn't really much pain. And because I was also in the Wednesday expirations, the trade wasn't difficult to hold. At that time, let's see it right here. So I'm holding this trade all day. I initially sold it for $9 credit, and I had to buy it back for $13.50 debit, which is bad, but not the end of the world. It was well within my risk parameters, so I was comfortable holding the position. In the meantime, I was spending majority of this day trying to finish up a new soft updates to the Quant Trading App trade engine. So we're going to have dark mode, should be integrated next week as a soft update to improve a little bit of the quotes. This is just a prototype here, so this is not the final snapshot. It wasn't working for the first half of the day, so we can see the expected range move came in later in the day. But for the most part, I was prioritizing something else other than trading the markets that was not matching my conditions. Running a put credit spread meant I had a little bit of time on my side as I was working on something more advanced. And that's something that I'll often do, or I think it's an important takeaway for newer traders. If the market is doing something that you were not expecting or planning for, then don't trade. It's as simple as that. I ran that position and moved on with my day, and then only came back at the end of the day and decided to do something about it, which was closing it. Later in the day, as I was contemplating what else do I want to do, this looks disgusting to me. I don't really want to partake in this type of environment right here. This requires a little bit too much focus to trade. So for next week, if the market is this volatile, I'm probably going to keep it at maybe one trade, two trades, and I'm going to be very particular about them. Then we can see right here, this is me saying I didn't take part in any of today's short as it was not any plan I had. Once the VIX retraced to 2 sigma this morning, I closed my longs and I let the market do its thing. Anything below 505 was not in the plan for me this week. You guys know I like to do my gamma exposure levels at the start of the week, so that means on Tuesday, because it was a holiday week, the market was closed on Monday, I mapped out the key levels in which I was interested in trading. I had nothing below 505, therefore I'm not trading below 505. You guys can also see, why did I go long here on Thursday? The market reclaimed 550. Sorry, I kept saying 505. I meant to say 550. The market reclaimed 550. Therefore, I'm back interested in being long. It is in the box or the playing fields that I planned or mapped out for this week. I had no plan, no map for anything below here. Therefore, I'm not looking to participate. However, around this level here, I was willing to take a shot as the SPX was at our absolute gamma strike. And by the way, this absolute gamma strike is the one that's calculated from pre-market. As the market was open, it would have moved. For those of you may be interested in the Quant Trading App SPX trade engine and you just want to see how did this play out here, this was the Thursday the 5th. I already did a video on this where the power strike was latched onto the absolute gamma strike, so we know how this went. Let me actually just pause this, and I did this video here, so I highly recommend you guys check this one out here for a full analysis or a full breakdown regarding this day. But we already knew this is our power strike. We already knew the market was likely going to be choppy around this area as it just oscillated around here. We can see we're below it. We end up coming back above it in a bit here. Actually, it rejects it. We come back down to support, we hold it, then we bounce, we break up over it, and then ultimately we end up chopping around here. The spot price has been a little bit off at the end of the day, so that's going to be fixed, as well as, again, dark mode. That's what's coming. That's more so my priority, to double check in on the servers, double check on the databases, make sure everything is running properly, as constantly patching any small bugs that are happening in the background, which is what comes with any type of software. Thursday, however, was simple. But let's get over to Friday if this is what you were interested in seeing. So let me just rewind this back to beginning here. Let's play this out. We can see the market, we had it had its bounce in the morning, and then we just started dropping. So let me pause this here just so you guys have context. Let's bring this a little bit closer. This is what we're looking at here. Now the market is down here. We popped at the open and then we broke down. So at this point, the absolute gamma strike was already at 450. I closed out that trade, remember, earlier in the morning around here. As something is going wrong, take that warning sign from the VIX. Absolute gamma is here, then the absolute gamma ends up dropping. We still see it sticking around here. It drops. Absolute, I'm going to pause this. It's moving. It's playing so fast. Okay, the absolute gamma strike is all the way down here. The power strike is up here. They're not in agreement with each other. However, price action is continuing to go down. We have other things to look at. The VIX was rising. We see that the VIX bounced off of 2 sigma. Even though the SPX was selling off, it was not going past the expected move for each 15-minute time frame. So this is a very well-controlled sell-off. There was no capitulation in this drop. This is a very fluid sell-off right here. This is real selling. No one's really panicking. It's not that aggressive. And then we have the absolute gamma strike also joining the sell-off, and now we're past the midday, and look what happens to the power strike. It drops down for a bit. It does pop back up. It's pretty volatile right now. The absolute gamma strike is the one that's more stable for today. This is our N1 strike, so this is the strike with the highest negative gamma. It's also the strike at this point with the highest put volume. Let's continue to play out the tape here. The power strike ends up dropping down. Now it's latched on. At this point, this is confirming 5,400. At this point, you don't really want to partake in any type of long trade. You don't want to think the market is going to have some sort of rally at the end of the day on a Friday, unless we saw the power strike and the absolute strike bounce back up. But that's not what happened. They both remained down here, and the market struggled to go higher. So there you have it, guys. In the data in itself, remember, my personal trade was all the way up here. I sold some puts right around here for the following Wednesday, as I'm still willing to take that shot. At that point, when I took my trade, it was right around here. So this is 10:40 a.m. Eastern time. I think it was right around about here. So the market drops down. I see we come down to the absolute gamma strike. I see this is the N1 strike. I say, hey, why not? I'll sell some puts here. I won't go 0 DTE. It's a little too risky to go 0 DTE. I would normally wait for a green candle to close on the 15-minute time frame at the level in which I'm interested in trading. You guys have heard me before say I like to wait for hammer candles to form. I was more focused on coding this day. My priority was not really to be aggressive as a trader, as again, the market was already below the parameters in which I was interested in trading for the week. I was not interested in doing much below 2 sigma, and here are the gamma exposure levels. We were below 550. That meant for me, I wasn't really going to do much. However, I did not want to pass up this opportunity. As we're at N1, we're at the absolute gamma strike, sell some puts, get back to work, Brian. And by work, it means go back to coding, go back to the lab, go back to being a quantitative developer, let the market do whatever it wants to do. The absolute gamma strike did drop back down. Could have exited a little bit earlier. However, the power strike is still up here. So at this point, I'm just willing to let it play itself out. Let's see what happens, because at the end of the day, the market very easily could have rallied and closed right back where I opened the trade. And I would have probably walked away with maybe a 10 cents gain or something like that on the vertical. I don't think I need to play the whole tip out here, so let me just fast forward to the end. So this is just a couple examples for you guys on YouTube that just wanted to see that are not Quant Trading App Gold members. Obviously, if you're a Gold member, you can go back and see this information for yourself. As the feed exists here, you can always scroll back up and catch the data at any point in time to see what it would have looked like. The gamma exposure levels are obviously in here too, so you can see how big was the gamma exposure. I wanted this video to be pretty concise, so I'm not going over everything, but there was major clues right here. There was massive absolute gamma down here. It completely dwarfed what was happening here. So if we scroll up, let's actually just take a look out of curiosity for myself here, and let's scroll to, where were we, around 10, we'll say 10:30 earlier here in the day. So here we have it, massive absolute gamma at 450. I'm interested in, taking and selling those puts, well aware of the 400 price breaks right down here. This is hour and a half later or so. This is not even an hour later. We've already broken past this level. We still see, look at all the put volume coming in right here. This is now the strike price that has the highest amount of put volume. There's still a decent amount of gamma here. It has been growing, and now it grows. So you see this? This is it earlier in the day. It's down here. This is where all the volume is. Now it's growing. It's pretty big here. Growing. Volume is spiking in the background here. Volume is spiking. Look at how large it's becoming. Obviously, this is just the dynamics of gamma exposure. The closer and closer we are to spot price, the more sensitive gamma is, especially towards the end of the day. So this is only natural to see this growing that way, but there's extra clues to look at. And data doesn't really have an opinion. Data is not right or wrong. Data is just data. So the data is there. It's just, as a trader, what matches your playbook, what matches your criteria. Also, what's going on in your personal life. There were other priorities for me on Friday. Getting this soft update ready for Quant Trading App next week is the priority. I can only work on some of the nuanced portions of the SPX trade engine while the market is open. And since this is the last trading day of the week, if the update is coming out next week, then I have to prioritize that on the Friday. These ES positions are not the only positions open. There was also additional reasons for me on Friday to close my trade. As we can see right here, this is a virgin point of control that price was rejecting. It was rejecting this key gamma strike. We were rejecting the 2 sigma strike. The VIX was hitting 2 sigma support. All of the signs right here for me to not be long. The ES positions were not the only positions that I have running. There are some longer DTE trades that I like to do. So this is one tip if you want to get defensive if the market is being volatile. Start trading positions over 30 DTE, around 40 to 45 DTE is a nice sweet spot. So here's some calendars opened a little bit earlier in the week. While the SPX was still at 528, this one was targeting 500. Gave it a little bit of room to the downside, as there was enough reasons to think the market was going to go down. Market continues to sell off. This is it right here, deciding if I wanted to make any adjustments to the trade. This is my live risk profile right here on that position. So I'm in a couple lots of this, so not a major size for me, but it's still about 5.5K in risk, but it's a 40-something DTE. At this point, I think it is only a 40 DTE, so there's still plenty of time left on the trade. It's still green. There's enough room down to 350 before deciding at this point if I'm going to add another tent. If the market was to bounce this week right here, up maybe 1% from where we closed on Friday, it can be a decent profit here. Obviously, if we have a really nice bounce, IV might come down a little bit, so I don't think this will pull in the full $1,000. It might only pull in maybe $700 or so with just these 2 lots, but that's a nice return on a 5.5K position. There's still enough room for the market to drop 1 more percent before we hit the parameter of the break even on this calendar. This is kind of cruise control trading. This is risk management. This is often what I'll do. I know the next few months of my life are going to be very chaotic and very hectic. So I'm going to trade some really longer DTE positions Things that are much safer centralize around where there's a lot of gamma, and just follow my own rules, my own discipline practices. And if I take a loss, it's a small loss. I have a plan, which is more important than anything. What's my plan for if it's going wrong? If I go long here and we don't hold that level, or we don't break the stop loss in the same day, let it play itself out. The next day, if we're not holding level, close the trade. Then we're at absolute gamma strike. We're at the highest negative gamma strike. I want to do something here, sell some puts, maybe run a butterfly spread is something that I would often do. If we weren't below 2 sigma, I would have just ran an iron butterfly or an iron condor, thinking we would have consolidated around here. But because we're below 2 sigma, I don't want to give any risk to the upside, so I just sold some puts. Market continues to sell off, held it all day, closed out the trade. It didn't do what I thought it was going to do. Quant Trading App's data showed we weren't going to really recover. Once the power strike came down here, we latched on the whole afternoon session and just stayed down here with the absolute gamma. This was confirming that we're not really going to bounce, as there was no movement. It stayed flat down here. N1, the power strike, and the absolute gamma strike, and the highest put volume all down here. I didn't capitalize on this opportunity. I didn't run a 0DT iron butterfly or a 0DT iron condor for down here. Again, priorities were elsewhere. The data is the data. The information is the information. Each trader obviously has their own rules, their own practices, their own disciplines. Hopefully there was some value for you guys to see a video like this. I've showcased videos in the past, so I'll just bury them in the greater context of a larger video. I might just include at the end the trade in which I'm in, or trading that might not have worked out. So if you watch the videos all the way through the end, sometimes I'll throw those in there. But again, there's only but so much that I can pack into each video. And if I don't think it's that relevant, or I don't think there's much to learn from, then I'm obviously not going to include it in the video. Thanks for watching, guys. Leave a comment down below if you really enjoyed this video, or if you want to see more like it. Share it if you learned something, and I'll catch you in the next one.